Hi, folks. This is Lee with the Market Sense for the week of October 20th, 2020. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And our first chart, as usual, is a weekly bond market chart. The bonds are showing some signs of weakness here, which is really kind of interesting. They've got a lows here in the, what is that, 73.10 area. I don't think they're really breaking down unless they get below 173 even. And even then, we're looking at a previous swing low and the lower Keltner band here that are both in the mid 169 range, 69.10 to 20. So that's about all I think they would do if they do break. But the fact that they're looking to break at all is a little bit surprising. Fundamentally, you got the Fed keeping interest rates as low as possible for as long as possible. And bond market breakdown sort of suggests higher interest rates and suggests that they may think the economy is improving. So that's just a very interesting development there. If they don't continue to break down and head down to the mid 169 area, or if they hold in this 73.10 area, the best support or resistance this week was about just over 175. That's 175.06, that middle moving average there. They could move higher than that also, but they do seem to be looking a little weak lately, which again, all I can say is it's a little surprising. I'm fascinated to see how it develops. In stocks, we have a couple of possibilities here, and I'll tell you which one I think is more likely. After the little breakdown we had here from the highs, they've rallied back up, and this high, since they've turned down and taken out last week's low this week, kind of makes it look like they've tried to get back to that high and failed. Now, that's not a good sign. And it would be really negative if they were then to take out this low here, which is, that's below 3,200. 3198, I believe it is. So taking that out after not making new highs, that would be a pretty negative development. And it's possible. But what I think is there's a lot of good support right here. You see the confluence of the projected low and the middle moving average here. They're both in the 3416 area, let's call it. And I kind of think that's probably going to hold and may see them back up to, I don't know, 35.27 or even higher before the week is out. Now, if they do break, there's more support down here in the 33.50 area, but it kind of looks to me like they could be holding here, and that would be a fairly good sign to send them for another boost to again, at least get to 35.27, but possibly go test the old highs. So we'll see how that plays out, but I'm kind of looking for this support to hold here. And if you look at the QQQs, which represent the NASDAQ, it's almost the same situation. They also broke down, rallied back without making new highs. And now they seem to take out that low and be moving lower, but they're doing it right into support. Now this support here is in the 283 area. And that really looks like pretty doggone good support. Now, if it breaks, we get 277.50, and who knows what else if they break that. Again, it could turn negative, but I'm kind of expecting this support to hold here, and that should send them back up to at least the 295 area. And again, possibly strong enough to go test the old highs if they get enthusiastic. We do have some stuff to look out for this week. The Fed releases their beige book. Their opinion on the economy will be out Wednesday afternoon. And then, of course, Thursday morning, you get the weekly employment claims as well as leading indicators. So there are some things that could jolt the market this week a little bit, but by and large, I expect them to kind of hold this support here, and let's see how strong they are when they bounce. So that's what we've got for you today. I hope you can find something profitable to get